Wow. Beautiful, beautiful, beautiful. Yo, congratulations everybody, for hopping on this call. We're about to go ahead and go over the MT4 basics. Really, honestly, I'll take as long as it takes, but I truthfully, honestly want to go ahead and get this call, on the way. And, just really make sure that any person, if there was ever anything that you wanted to know about, how to really get started with MetaTrader 4, with Forex, all the basics, how to really go ahead and get somebody set up the right way and what to teach them, back when they was new, right? You're either super new and you need this, or maybe you've been around, but you kind of forgot how to break things back down to a new person, like, remembering what that experience was like back when you actually first started. So I'm gonna be giving you guys, some breakdowns using the charts, and really just giving everybody the basics. This is not strategy. This is really basics for the setups. But this is key because a lot of people, if you're going to build your business using MetaTrader 4, right, building your business with FRX, this is the type of information that people need to know in order for them to even start being able to plug in with the educators, to be able to plug in, the signals and all those different, benefits that we have. If they don't have this mastered, if they haven't mastered these basics, it's not gonna hit the same for them, right? You're gonna wonder like, yo, we all made money. Why didn't you take the trade? And it's gonna come down to calls like these as to why people really didn't get the value that they needed. So I'm gonna go ahead and share my screen and go ahead and get you guys right. Just drop some 777s in the chat so I can see how many people is actually with me and really ready to go right now. Like how many people is with me right now and ready to go? Like I just want to know, just show me what a 7. You ain't got to say nothing. Just show me what a 7 so we can see who's really ready. Right. So, a couple steps, right? I'll go ahead and actually just type some things out for you guys to make it very simple and easy. And for anybody that's joining, our team, right? Trade Smart Academy, or maybe your wealthy everything, or maybe your next level, I want you guys to understand that, before you actually trade, you have the ability to create a demo account, right? One thing that's cool about Forex is that you want to go and actually create a demo, right? And I really do believe that everybody should create a demo. A lot of people preach, go straight to a live account, just place 0.01. And that is true. But I really do like the idea of creating a demo account in the beginning so that you can honestly, without any pressure, play around and figure out what certain things do, what certain things mean, without having to, feel any type of attachment to it, is very, very, very key in the beginning to go ahead and create a demo account. So how would you, or where would you create a demo account? Right, you can actually create a demo on MT4, right? Create a demo on MT4, right? The broker that I use, I'm not recommending any brokers. I can't recommend you guys brokers unless, it's maybe like Owanda or maybe like a forex.com. But the broker that I use is Prosperity, right? Prosperity. Yo, it's Prosperity, right? Prosperity FX, right? Hopefully I spelled that right. I believe I did. Yeah, so Prosperity FX, right? That's the broker that I use. And it doesn't matter. If you're going to create a broker, I can definitely recommend you a demo account broker, right? It's nothing stopping me from recommending you guys a demo. I use the Prosperity FX demo because, it comes with basically everything, right? You don't just trade Forex. You could trade, of course, crypto on there. It has a lot of options, for the indices, gold and silver, oil, etc. And it's my preferred, that I like to personally use. But of course, you guys got to decide in the beginning, what live account that it is that you're going to, send your money to. Typically, when we use our brokers, we're actually depositing with Bitcoin, right? So you got to go ahead and actually deposit to actually create the live account, right? You must deposit first. Right? You must deposit first, and it's going to be Bitcoin, right, to actually create the live account, which is really cool because, you know, I like the fact that we use an asset like crypto to actually deposit as well as receive our funds as well. It gives you a lot of options of where to even send your money, you know. But we'll get into that type of stuff. But you know, I really like that it's Bitcoin and not cash, and not just, you know, bank transfers and things like that. I actually really enjoy that. But that's really the beginning, you know, stuff for this, right? So like I said, you know, you got to pick out a broker. You got to pick out, you know, what is going to work for you. I believe that the broker that, you know, you're supposed to use, you know, that's I would say, you know, regulated is going to be, you know, Oanda. But the broker that I use, that I, you know, consistently deposit my money into and withdraw money from, I use Prosperity. You know, I know some people use like KOT, Hugo's Way. There's a lot of other things, you know, that's always coming up. But you know, you got to do your own research and figure out, you know, what's going to be comfortable for you. So let's actually talk about a few things, you know, on the MT4 platform that you guys got to actually understand, right? There's two terminologies, right? You have your balance, okay, and you have your equity, right? So anybody that is trading, let's say you're coming from trading HFX, you know, you typically only see a balance. You don't really ever get to see an equity. So a balance is always going to be, you know, how much money you had in your account before you place any trade, right? Regardless of how much a trade is up or losing, your balance is what the sum of all your closed trades are currently, right? It's the sum of all of your closed trades. However, your equity is your balance plus or minus your open trades, right? Which is very, very, very important. You really want to watch, you know, your equity more than anything, right? Your equity is the balance of all your trades that are active plus or minus, right? So whether it be, you know, up 3,000, down 2,000, whatever the case may be, is going to be all those trades that are active, right? Minus your balance, right? And those two things are super key that you got to really watch, you know, your equity. Another thing that I'll add, and I didn't mention this, is that you have different types of leverage that you can use when you create an account. My recommendation that I use, right, is 1 to 500. And there's a reason why, right? 1 to 500 leverage is the most that you can get. I use this because, you know, eventually, depending on your account size, you know, it's going to stop you from being able to add more trades, even if you are in profit or loss. You know, there is going to be a limit to how many positions, you know, you can actually place. I want the ability to place as many positions as possible, especially if, let's say, you're trading something like a steady, you know, trading style where you are risking very small amounts of pips, you know, like you're risking 5 pips on a setup, you know, and you maybe you're stuffing 3% risk into that trade, but you never want to pick like a 1 to 50, 1 to 100 leverage and not even be able to really capitalize on the trade that you properly, you know, were risking for. And that can happen, you know, if you aren't using, you know, as much leverage. But you can, I would say 1 to 200, 1 to 300, 1 to 400, they're all fine. I typically, you know, put 1 to 500. So I know some people ask, you know, what leverage to pick. I use 1 to 500. The goal is to just make sure you're using risk management when you do that, right? So the next steps, right? So let's get into the saucy stuff, right? We got to talk about pips, right? We got to talk about pips, how they actually make us money, okay, and how to count them in the markets, right? So pips, we can't leave out pips. All right, everybody drop pips in the chat for me. Actually, drop pips in the chat, right? Because pips makes the world go around. All right, back in the day, like pips was a big thing. Like how many pips you caught. Like if you wanted to ask somebody like how good of a trader you were, they didn't ask how profitable you were. It's crazy. They didn't ask how much percent you made. They asked you how many pips did you catch this week, right? How many pips do you catch on average a month? That was the conversations back in the day. So pips is a big thing. You know, y'all know we have, you know, our chairman 50, Mr. Wealthy Pips, right? You trust me, it was a reason why he had that name, because just the idea of pips was huge, right? It was huge. It was worth more than gold back in the day. But now it's more like, you know, percent and things like that. But let's actually just show you guys, you know, what pips are. So pips actually stands for points in percentage, and is really just a unit of measure, right? It's really just a unit of measure, right? Just like inches, just like miles, you know, just like centimeters. It's just a unit of measure of how far price has actually moved, right? But it's so far past the decimal, right? It's all these small numbers, you know, that, you know, you have to go ahead and call it pips, right? It's a point of a percentage. It's not even a full percentage, right? We're talking about little points of a percentage. All right. Okay, I just got some money. Nice, nice. But let's actually talk about it, right? So let's actually talk about it. So right here, I have 3 different levels, separated in different points, right? So let's actually go ahead and label this. So right here, let's just go ahead and call this spot right here. Let's move that, right? Let's go ahead and call that spot right here, right? Entry. All right, let's call this spot right here entry, right? So this level right here is entry. It is at the price point 1.16000, right? So let's just actually figure out, how do you actually decide how many pips a move is, right? Now, if you're using Tradingview, it's really easy. There's this measuring tool on the left-hand side, right, of the screen that you can actually drag from one point to another, and it'll actually tell you how many pips something is, right? This number right here on the right-hand side is the number of pips. So this move from this price to this price is 50 pips. But how can you actually calculate it, right? Let's actually write out the numbers, right? For each of these moves, let's write out the numbers and see how can we actually calculate this. So it's 1.1600, right? And then up above, we'll just call this point TP1, and we'll call it 1.1 is 1.16500. Okay. So this is TP1. All right, and we'll space that out. All right, cool. So what I like to do is that, and this is something I learned very early, is that when you're looking at majority of the Forex pairs, except for the Japanese pairs, right? You can write this down, except for the Japanese pairs, you can go ahead and take a look at any number. And let's say if you're subtracting it from another number, so let's do it on the side, right? Let's do it on the side. So let's just say we have 1.16500 minus, right, 1.6000, that's 1.16000, right? One thing that I learned is that if you want to go ahead and subtract 2 numbers, if I subtracted these right now, right, I would easily get 500, right? I would get 500. The 1 would scratch itself out, the 1 would scratch itself out, the 6 would scratch itself out, and I would be left with 500. But this is not 500 pips. So it's 2 ways you can go about it. What I realize is that when you're looking at almost any of the Forex pairs, except for the Japanese pairs, the pips actually start at the second number from the right, right? The pips actually start from the second number from the right. So what I would do is I would say, okay, we got 1.1650 and 1.1600. Right? I would not add those extra numbers because those numbers are what we call pipettes. They do not matter, right? For the most part, they really don't matter, right? The pips actually start at the second number from the 0, or what you would say is 4 numbers after the decimal, right? There's 5 numbers, but the pips start 4 numbers after the decimal, or the second decimal place, right? Or the second place after from the right hand side, right? So if I take these 2 numbers and subtract them, right, I'll get 50, right? I'll get 50. So I'll get 50 pips. Just go ahead and give me some feedback, family. If that makes sense, just drop a 7 in the chat if that actually makes sense, right? I know some of these things can be quick, all right? Because we do have a little bit of time, and I still have a couple different, you know, concepts to go over, but I want everybody to actually understand this very quickly. There's 2 tricks, right? This is for all Forex pairs except for the Japanese pair. So I'm just going to quickly click on a Japanese pair and show you guys the difference. So what you can actually see is that the Japanese pair only has 3 numbers after the decimal. It does not have 5 like all the other Forex pairs, right? It does not have 5. As you guys can see, we got 0.59000. It's 5 numbers. But any of the Japanese pairs, they're only going to have 3 or like 2. Okay, so because of that, that's the only one that's different. Still, I'll give you guys this nugget. You take the last number off, right? You take the last number off, then the number after that counts the pips. So that 9 is 9 pips, right? If you subtract that 79 from 90.70, that would be a 9 pip difference, or yeah, 9 pip difference, right? You don't use the last number, right? So let's just go back to Euro US dollar, right? So cool. We have the difference in pips between the entry, right, versus TP1, right? Let's actually go ahead and add TP2, right? Just so we can create some, you know, comparison for you guys. This price point is 1.1700. Okay. Now, the cool thing about this is that these are all even numbers, right? So the math actually gets really easy, right? These are all even numbers. So the math can actually be really easy. So if, let's say if we wanted to figure out how many pips from the entry to this take profit 2, right? How many pips is the distance? Right? As we can see, I can use on Tradingview, which everybody should really learn how to use. I can use on Tradingview, right, the ruler tool, and I can easily see that it's 100. But I still want to be able to do the math, because what if you're just on your phone, right? What if you're just on your phone, or, you know, you got to figure out another way. So I want every single one of you guys to actually know how to do this. And also for everybody, I see some people still looking to get on the call. If you guys can help with adding people to the call, I appreciate that. But let's go ahead and do the math. So I'm going to do it the way that I want you guys to be able to do it. So I want to subtract 1.1700. I'm not using the last number. And then I'm going to subtract the 1.1600 from that, right? From those 2 numbers, what do I get? We got, of course, 0.0100, right? So the answer is, of course, 100, right? It's 100 pips difference between these 2 price points. Now, the question is for somebody, especially if you're super new, is, okay, well, what's the point? How do pips actually matter to making money? Like, I'm not here for pips. I'm here for money. I want to pay my bills. I want a Lambo, right? I'm trying to go to the Bahamas. All right, that's where something called lot size actually comes into play, right? Lot size. All right, lot size is super key, right? But I hope everybody gets the basics on this pips, right? We're already up about 20 minutes, right? This is where the real stuff actually comes into play. All right, cool. So let's go ahead and break this down. We have 3 different types of lot size categories. Okay, 3 different lot size types of categories. And I'm going to use everything we have here to show you guys how this translates into actually making money, right? So you have micro, mini, and standard. All right, you have micro, mini, and standard. So micro is a 0.01, mini I guess that's just gonna have to happen, huh? Okay, cool. Mini is 0.10, Got you. And standard is 1 point. I always got to do 2 zeros behind this because just to make it make sense for me. Right. So micro, mini, standard. Right now we got to figure out, okay, there's a question. These are the position sizes that you can actually enter in your MetaTrader 4 app or even on your computer. Some of us may trade and take trades on our computer, right? And you can do, and it's not just only 0.01, 0.10, 1 standard. It can be 0.02, 0.03, right? It can be above a mini. It's not just 0.10. It could be 0.20, 0.25, 0.23, 0.44, whatever the case may be, all the way up to a standard, right? So if it's 1 standard, that's 1 standard. But let's say it's 2 standards, and that's a 2.00. But now you got to ask yourself, okay, how do you actually work the math? How does this relate to money? Well, each of these position sizes will pay you out a certain amount per pip. And this is how it actually works. So a micro lot size, which is a 0.01, will actually pay you out 10 cents per pip. Right? 10 cents per pip. That means that every pip that moves, let's actually slow this down real quick. It means every pip that moves, you'll get paid 10 cents on it. So how about we do this? Let's say I took an entry from this entry point and we went up to the 50 pip mark. How would I actually decide or conclude what my profit is? How would I figure that out? Well, what I can do is I can take that it's a 50 pip move and multiply that by 10 cents. Okay. What does that equal? Right? What is 50 pips times 10 cents equal? Anybody? Yep, $5. Perfect. All right, we all on the same page. I want you to drop it. Did you do it in your head? Did you do it on paper? Did you do it with a calculator? Tell me how you guys figured it out. Every way works. And I used to do it in my head, or when I really first started, I would do it on paper. I would do it on paper over and over and over and over and over again. But if you do it with the calculator, guess what, family? That's perfectly fine too. It doesn't matter what you do it with. As long as you get the right answer, that's all that matters. Head, paper, calculator, ask Siri, whatever you do, as long as it works for you, it works. Just make sure the math is right, right? So 50 times 0.10, right? Because you used a 0.01 lot size. So if you used a 0.01 lot size, it would have been 50. Let's just do some quick math real quick. What if my lot size was a 0.03? What would the profit have been? Actually, how about this? Let me ask the first question. Let's slow down. Check this out. If I use the 0.03, the first question is, how many cents per pip is that? Drop it in the chat. If I use the 0.03, how many cents per pip am I making? All right, beautiful. Correct. Can I get more people with confidence? Cool, right? 30 cents per pip. So now we can go ahead and do the math and say 50 pips times 0.30 equals, and what does that equal, family? What does that equal? That's $15. Yeah, that's $15, right? So that's how simple the math is. Once you have this set up, it's like your chart, it's just your answer sheet. You just plug in the formula, and the formula is just multiplication. And we don't have to be smart or geniuses in this. use your calculator. Nobody's going to fail you on the test, right? Go ahead and use the calculator, use paper, whatever the case may be, to get it right, and double check it. And sometimes, let's say you don't know if you got it right, place the trade on demo and see if the math lines up, right? Place the trade on your demo account and see if the math lines up. So let's go ahead and talk about the mini, right? The mini lot, which is 0.10, right? That's a 0.10. These are the actual positions. I want you guys to understand the micro, the 0.01 is the actual position that you put inside of your MetaTrader 4, right? When you place the trade, it will pay you per pip $1. It will pay you per pip $1. And when you really think about this, it really makes what we do make so much sense. Some people get paid by the hour, but there's another way to get paid in the world, and it's by the pip. It's by the pip. What if you could make sure that you got paid for what you get paid in an hour, what you got paid just to collect 1 pip? I want you to really slow yourself down. What if you could make sure that whatever you get paid an hour, you knew how to collect that with just 1 pip? What if it's $12 an hour, $15 an hour? Let's just say $20 an hour. What lot size do you need to collect $20 in just 1 pip? Let's really think about that for a second. All right, just think about that for a second. 1 pip. Correct, Steph. Correct. Is it Steven or Stephen? All right. All right. It takes two. It's a two standard lot. 2 standard lot. You gotta really open your mind and really say, okay, there's literally an entire system in place that is fact. This is law, that if it moves that much, that's how much you make per pip. People say that trading isn't, trading definitely involves risk, but I'm gonna tell you guys right now, everything involves risk. A job also involves risk. It does. Not in the way that we think, but everything involves risk. But you really got to think about it. These are facts. I'm giving you guys facts right now. So the market's gonna move a pip. Right? The market's gonna move a pip. In fact, most pairs, they're gonna move at least 50 pips in a day. Right? How many of those do you need to collect to be financially free? That's just a question, right? I'm not tempting anybody, just asking you a question. How many of these do you really need to collect to be free, right? Make it make sense for you. So the standard lot, which is a beautiful position. I'm being honest, I couldn't imagine myself using anything less than a standard lot. It just wouldn't make any sense. It just wouldn't make any sense. Because check this out. Standard lot is going to pay you $10 per pip. $10 per pip. I've seen the market in 1 minute, move 10 pips. Imagine $100 in just 1 minute. 1 minute, 100 in 1 minute, right? That's the potential that you have, and this is not where it stops, right? The lot sizes go up and up and up and up and up and up and up. Okay, it go up. There are people out there that place 10 standards, 100 standards, right? 20, 50, it goes up and up and up. But this is where, most people will probably participate. And this is the formula to do the math. All you have to do is identify what lot size you use. If you want to do the math in your head, you can calculate it, right, on paper if you want to do it yourself, and you're going to multiply, right, with the correlated amount per pip that you're making with the amount of pips that the market is moving. So now let's do this. Let's do this, right? from here, we see that the market hit this level and it dropped down to here. Let's just do a quick calculation of what would have been made on a move like this. And I'm going to give you guys the lot size that was used, and I'm going to make everybody on this call, right? And anybody that watches this video as a recording, I want you to write it down and solve it in 60 seconds, okay? So from here to here, right, which is from the price point of 1.17 thousand to 1.16 thousand, right? I used the position size of let's say I just like to make things tough on people. 2.75 standards, right? To sell, sold for 2.75 standards, right? I want you guys to answer for me. If I sold from this price point, I'll even change this up, right? We'll go entry, and we'll go TP2. And I sold for 2.75 standards. Just type it in the chat. How much profit was actually made on this trade? Using the formula. Please don't use anything else. Use the formula that I just gave you guys. I need more answers. I need more answers. I'm be honest, half of y'all are wrong. Half of y'all need to check your math. But some of y'all are right. Some of y'all are right. So the first question is, I want everybody to drop it in the chat. This is very important. How many pips was this move, right? That's the first question. Drop it in the chat. How many pips was the move? Okay. So I want you to write that down on a sheet of paper, right? 100. Write 100 on a sheet of paper. The second question is, we know that our lot size was 2.75 standards. The question is, how much is that per pip? Drop in the chat, how much is 2.75 standards per pip? If you want to make it easy for yourself, what you can do is you can go ahead and multiply 2.75 times 10. multiply 2.75 times 10 and drop the answer in the chat. Now, once you have that answer, all that's left is for you to multiply that answer times 100 pips and then drop your final answer in the chat. $2,750 should be the correct answer. Right? $2,750 should be the correct answer. That move took the equivalent of 3 days correction. That move took about a day and 8 hours. That took about a day and 8 hours, right? A day and 8 hours. A day and 8 hours. 2,750 a day and a half, basically, right? A day is really a day and a third, because 24 divided by 8 is 3. Right? 1 1/3 day. Okay. So that's the power of Forex. Okay, that's the power of Forex. This is why we do what we do, because it makes sense. Right? It makes sense. The pips make sense. What we do makes sense. All of that stuff, it makes sense. All right, shout out to everybody that took the sale on GU this morning. But that is honestly, I think there's one more thing I want to talk about, right? Before we close, right? There are different types of orders, right? There are different types of orders. You guys can practice that math, but I gave you everything that you needed to build that math, right? I gave you everything that you needed to build it. But there are different types of orders. And this is very important for people learning Forex to know, especially if you want to take signals, or you don't want this to become a job. There are different types of orders. You have what we call market execution, right? Which is entering, buying, or selling at the exact time and price of wherever the market is. And then you have pending / limit orders. Okay. Call them pending orders because one of the names of them is limit. So I don't want to confuse you guys, but some people will call it different things. So we're going to put both names, right? But pending orders. Pending means future, right? Pending means future. What that means is that this order will activate at a future price. Now, there are different types of pending orders. You have stops and limits. Both can be either buy or sell. So you buy stops and buy and sell stops, I should say. Buy limits and sell limits. All right. So these are the types. I'm just going to go ahead and go through some examples of how that works. And then we are going to call this a session. All right, so let me go ahead and get a drawing tool. Unfortunately, this Zoom doesn't come with a drawing tool unless I'm using the other thing, but it's all good. We're gonna make it work. All right, so let's just say let's make it make sense. Let's just say I'm looking at Euro US dollar, right? This is Euro US dollar. And I'm looking for a sell. But let's just say that price is currently where it is right now, right? So I'm gonna do a call out tool. You guys can use this too. This is current price. Current price. This is where price is right now at this moment. But what if I want the market to actually put me in a trade at a future price? How about we call this right here, right? Future potential price. Let's make it chronological, right? All right, future potential price. What I can do is I can place an order here. Now it's a certain type of order that I would place. The way you can use limit orders and stop orders is simple. It's just like this. A limit order is looking for the market to pull back. Whether it's up or down, a limit order, you can write this down, is looking for the market to pull back. A stop order is looking for the market to continue in that direction of where you put it, right? You want it to continue in that direction. So if I wanted to actually place an entry here, let's make sure this is correct. Let's do this so I can make it very simple for you guys. Give me 1 second. I'm gonna change the colors so you guys can, you know, make this very simple. Stop color, target color. So we're gonna go red and green to keep it basic. Okay. So what I'm looking for is I'm looking for a sell. If I was looking for the market to sell at this future price point, then I would use a sell limit order. Or let's just say, you know, our signal providers may be calling a sell limit order at this future price, which is 1.16 thousand. So what I'm expecting, and now it's time for me to draw it out, is I expect that at some point, this market to move, but come back to this price point, not hit above my red, but continue to drop down. That is what you would use a sell limit order for, right? Meaning if it's a sell limit, I expect for the market to pull back before continuing. So I am putting an order, in this case, above price. If it was a buy, it would be below price, right? Now, let's just say I expect something different. Let's say I expect that the market is actually going to just continue to drop. I just think it's just going to fall out the sky, right? Let's say that's what I think. Then I would use a different type of order. So let's just say I think that, hey, if the market were to break this price point, it ain't no coming back. I could place an order at that point. At the end of the day, this is still a future price because the market isn't there yet. All right, so this is still a future price. Currently, the market is here. It's not there, meaning I don't want to enter here. I may feel like if it doesn't break below this point, I may feel like it may continue to go up, right? That may be the rules of my strategy at the moment. But if I feel as though that if they break here, right? I've used this on swipe point a lot where I don't have time to wait for it to break. So I'll just put a sell stop below, that major buy or sell area that they're calling, where they say break below confirms, is valid for a sell, right? Whatever the case may be. That order that I would use here would be a stop order, right? That would be a sell stop. That's a sell stop. Okay, that's a sell stop. I'm expecting the market to just keep going. It's going to hit me in, but keep going in the direction of where I placed the order. I placed the order lower than price, and I expect for it to continue to go lower. Sell limit, I placed the order higher than price, but I still expect for it to go down, right? Because they are both still sell pendings. The buy side is literally the same. It's just the opposite, right? It's the same but opposite. And I like this. I actually believe that this is probably more likely than the other one. But both of them were actually really good trades, to be honest. You could place both. Sometimes you can literally place both, to be honest, family. You can place both. You can place a sell stop and a sell limit. If you just know that thing just gotta keep going overall, both work. But that's really it for today, family, is that we have these different types of orders, different types of position sizes, different amounts of pips. But at the end of the day, all of that stuff is coming together for you to be able to make money in these markets at your control, right? There's a lot of what you really got to understand is that there's a lot that you can really control. Even though the market is going to kind of do what it wants to do, you can control when you get in, where you get in, and how much you get in for. And I believe personally, that's more than enough control that you need in the market. Got you. Types of pendings, stops and limits. Those are buy stops and sell stops, buy limits and sell limits. All right. What is USD JPY doing? That thing bullish. What's gold doing? It's a beautiful day in the markets today, family. I'm gonna tell you that right now, even though it was a holiday. But yeah, family, that's it. If you guys have any questions, I'll open up questions. I'll open up for some questions really quickly if there are any for any new people. But that is really it. I think that's everything for my agenda today. We could talk about, base pair, quote pair, but that's honestly in the academy. I don't even think we have to do that on this call. Base pair, quote pair. That's like top 5, first 5 videos. But yeah, love you guys. I appreciate every single one of you. I highly recommend that after watching something like this, if you haven't, I would recommend going to Manny Quionez's boot camp. He has in his favorite videos, Manny Quionez has a boot camp that you guys can actually watch. All right, I'll just go to it really quickly because I don't mind. All right, I want you guys to go ahead and really get educated properly. And we have, different basic educators that you guys can plug in with. So FRX. And literally the first trader on the list, Manny Quionez, right? The voice of the academy. If you scroll down and you go to his favorite sessions, he has an entire Forex beginners boot camp that you guys can watch. Forex beginners boot camp, day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8. right? You should start from boot camp day one and just take one of these videos one at a time each day. And I really do believe that, you know, it's gonna be a huge benefit, and you like really learning all the basics to Forex. But with that being said, look, appreciate you guys. Time to go ahead and turn up, master these markets, take over these charts, catch these pips, and make this money and free ourselves. Love you guys. Have a phenomenal rest of y'all day. I see there's no questions. All right, family, let's get it. Peace.
Write this down. You have to fall in love with the process. But you can't skip the process.